if you were to have like 60 years old when you have 1 million, right?
Yeah.
That would mean to say you can only spend present value of money, is about 1,000 ringgit, lesser than that.
Right.
So I personally,
what is your aim?
My aim, the required fund for me to retire is about 7.6 million.
Wow.
Hey Louis, so since our last talk, which is about budget announcement back then in last year, October or November, so what has changed recently in the market?
So Priscilla, I think we understand that a lot more taxes are being imposed. Even SST is being upgraded from 6 to 8%. I'm not too sure whether that is an upgrade because it feels like a lot of consumers are having a pinch, and even more we are having capital gain tax going forward. So the details are not out yet, but I think that a lot more pressure is on the consumer side of things, and therefore I'm not too sure how can this consumer cope, under this scenario. I mean, based on your view as a CFP, what do you think about the current situation? How can you come in to help this kind of consumer, and how can they save up more, or even how can they make more money from their own salary?
So with the hike of the SST, right, they do not impact like food and beverage and logistics, like all those things. But eventually, we might experience somehow of a supply chain effect, because they will then, in the chain, even though certain things are not being impacted, but they will then mark up the price because their profit margin, business owners' profit margin will then be impacted. So they might transfer these costs to the consumer in that sense. Okay, so but in a sense, if let's say they do not hike it unnecessarily, on the core expenses industries, we only impacted slightly lesser in that sense lah. But I also understand that the reason why they have to implement this 8% SST is also because previous budget, they already reduced those tax rate for those N40s as well. So they have to somehow increase their tax revenue in that sense now.
Yeah, I think government side of things, to improve the government coffers and also the situation of the government going forward. I think there are more things that is happening, like subsidy rationalization program. So which means that they are taking some part of the subsidies away, but they are going to impose maybe on the T20. But right now, people are encouraging them to go on the PADU system to sign up and put inside whatever information that you have, so that they can do a better, more comprehensive subsidy for the population. So I think in that sense, it's good. What I can see from SST, yes, you might say that the impact might not be so great, but as a salary person, let's say they are drawing salary of 5,000, what sort of impact are we looking at here? Because if it is additional 2% and they are using 5,000 ringgit as a whole to spend, then maybe the
impact is rather low in that sense actually. But if we were to look at it specifically speaking, I think it would even impact lesser than 2% of their expenses. But then, like I said, we haven't experienced any other business owners increasing their price just yet. So we just have to monitor and see how it works. So in that case is that if your expenses somehow increases, then it's time for you to review your emergency fund. Because emergency fund, you will need at least 6 months of your emergency fund parked in a money market funds or a liquid asset. And of course, after that, to make up the reduction of your cash flow, perhaps you will need to really stop procrastinating and start investing already.
I think investing is a very big area, but as a CIP, do you mind sharing me what sort of composition is there? Like for instance, how much should you put into emergency fund? How much should you put into investing? So what kind of composition are we looking at here?
So usually when it comes to investing, before you even start investing, you need to get the fundamentals right, which is having at least 6 to max 12 months of your expenses saved for emergency fund. So if a person feels that 12 months is a bit too much, then 6 months. If 6 months is still too much, right, then maybe work with something at least something small first. Most importantly is that you have at least some emergency fund. Then after that, you start your insurance, your necessities lah. After insurance sorted out already, talk about investments. Now investments is not about how much you should then put in. It also depends on your financial goals. Assuming a person wants to get married within 1 to 2 year time, then we would recommend them to go for something more conservative in that sense lah. Because with a short time of period, you might subject to volatility if you invest into higher risk assets. So then we have to work backwards with your financial goal. How much do you need, and all those in details to curate what is suitable for you to invest. But of course, if you talk about longer terms, I would think invest in something with a higher risk, but not everything in crypto lah, in that sense, even though crypto these days are quite popular lah. But what's your take about long-term investments?
So I would always suggest that people go for DCA approach, dollar cost averaging approach, then long-term position. I think DCA approach can be utilized in many countries, but I particularly like to look into those growing countries such as in the US, perhaps currently in India as well. So these are areas of growth whereby they are positive. Their CAGR, CAGR growth is more than 3 to 5% per annum. So that is what I can see, still growing in amongst the investment community. And DCA approach is because we want to be mitigating our emotional risk. We don't want to time the market, and therefore we are using the DCA approach. Make sure that we get exposed at any point of time, even though we know that maybe the market might be correcting significantly in the near term, but having DCA approach, it gives you exposure to the market. As long as you're in the market, as long as the economies are still growing, therefore you are able to capture you can ride the wave along the longer term period. So that approach, I will always believe that is always a good thing, because you get exposed to the market itself. So that's one point. So coming back to investment, also I think besides just now you have mentioned about the cryptocurrency, I think cryptocurrency is always an asset, that they will still continue on going forward. So basically what I'm trying to say here is that if you have an opportunity, perhaps you can put maybe 5% into crypto asset. Although it's very risky, but I think you can put that into some sort of ETF, because we have ETF approach of cryptocurrency, such as in Hong Kong we have 3066, 3068, the stock code as the Bitcoin, and also Ether ETF. And also in the US, we have several SEC approved Bitcoin spot ETF as well. So those are the areas that you can actually trade through M+ Global.
Yep. And also I want to add on to the point is that you mentioned 5% allocation into crypto, or if you don't really understand crypto in that sense, you just want to know what is it about, so just put an amount you are comfortable losing everything. So that you don't get panic, or you don't have a sleepless nights looking at your account and see what's going on in the market and all.
So I think that is very correct. So just now we have mentioned about the composition of your personal emergency fund, things like that. Then investment. So recently we have also a topic. Everyone is talking about the US dollar strength and also Malaysian ringgit. So what are your take on this US dollar and MYR strength?
To me, I would think that US dollar have been strengthening against Malaysia. It's been quite some time already, and people are thinking that it will go up to 5. But in my opinion, I would think that it should be able to stabilize and around 4.5 in that sense. So that that's my take lah. What about you?
So I think the recent highest point that US dollar has reached is about 4.795, which is about 4.8. But going forward, I think there are more policies coming out from Malaysia that can actually sustain the Malaysian ringgit at this point and maybe gain more strength towards the year end. So I would say that reckon the 4.8 will be the resistance at this point, and it may actually go down towards 4.5. So that would mean Malaysian ringgit is gaining strength. I think overall we can see that the policies has been set quite clearly last year for Malaysian, and this year itself is about execution. So if execution is done well going forward, then it should be able to see the 4.5 coming.
So in that sense that those people, because these days people saying that US dollar is strengthening, so they should actually divert more of their investments towards US actually. So what do you think? Should they actually put some in Malaysia as well in that sense?
Yes, I think diversification is very important. So you have to have non-RM asset. You also must own some RM asset.
Yeah.
So I think that is very important because you cannot be assuming that you are putting right now into US asset and the ringgit strengthened, then your US asset will be actually diminishing in the value.
Yeah.
So I would say that at any point of time you must have diversification and also you must have exposure in both areas.
Yep, I agree on that because we can't go all into one single country because there's also country risk as well. With the upcoming election, things might
be volatile.
Exactly.
Be volatile, But US has been, going on a very steep interest rate up cycle over the past few years. But right now they have been taking a pause and they might relook into the interest rate cycle going forward. So currently they are having about 5.5% interest rate. Our OPR is 3%. So therefore, people wants to put into something that is having higher yield. So that's why people might be taking out their Malaysian ringgit and putting it into US dollar or other currencies. But at this moment, I would feel that this year itself is a Malaysian year and Malaysian ringgit can strengthen from here is because we have a lot of policies being done last year. We have a lot of things that being planned last year like NETR, NIMP, and also a lot of this KL Singapore High Speed Rail may actually be revived going forward. So this kind of policies has been planned last year, and this year itself depends on the execution. So if execution wise it is good enough, then I think the Malaysian ringgit can actually strengthen from here onwards. And besides that, we also have to understand that the confidence level in Malaysia is actually being elevated from last year as well. How do I look at it? Is basically using FBM KLCI versus when Dato Sri Anwar Ibrahim has been appointed as the 10 PM. During that time, it was just about 1,500 level for KLCI. But right now, foreigners and also industry players are actually buying up KLCI above 1,500. Right now is standing around 1,550 level. So basically, people are more confident in the current government, and therefore from this year onwards, I feel that there could be opportunities for Ringgit Malaysia to strengthen from this point, maybe 470 towards 450 like Priscilla said just now. I would say that this range is quite comfortable for Malaysia.
So that also, we talk about the USD strengthening, right? So I think that also kind of impacted with our EPF return rates that recently announced. So EPF, like conventional, just announced it's about 5.5% and also Sharia is 5.4%. So what's your what's your take? I mean, if I were to look at the past few years, right, the difference, the spread between conventional and Sharia is actually quite huge. But this year it's rather thin. So what could have caused that suddenly Sharia EPF is performing so much better? Yeah.
So a lot of people have been commenting that 5.5 sounds like not so good, but I would say that kudos to the team EPF. I think they have been doing very well because they are managing a lot of funds such as 1.1 trillion to 1.3 trillion. So that is a very huge fund. If you are going to manage such a huge funds and get returns about 5.5%, that is very, very good because it means that you are because when your EM grows, you will have diminishing returns going forward because when your fund size get larger, it is much more harder for you to get returns. So I think 5.5% is very good, 5.4% is very good. And to your point, to your question of why the spread has been tightened from last time, I think it's 0.4, 0.5. Right now it's just 0.1% between conventional and Sharia. So I've checked through EPF to understand what is the composition right now. Say for instance, I think Malaysian equities is about 60%. So the rest will be in other properties and also maybe US asset as well. So in that sense, we can actually detail in. If we look into KLCI or FTSE Emas and a FTSE Emas Sharia, actually Emas Sharia in Malaysia is actually lower than the conventional performance. So FBM Emas is maybe 101%. So FBM Emas is actually 1% growth based on the chart itself, and that is just a spread of 1% against Emas Sharia. So which means the spread is very thin, and conventional is actually greater than Sharia in Malaysian's context. But in S&P 500, I have checked through S&P 500 Sharia and also non-Sharia index. For that particular 2023, that year itself, conventional has grown only 24%, but Sharia S&P 500 has grown 31%. So that is a spread of 7%. I'm not too sure whether you can get this. It means that when we are putting more funds into the Malaysian context, our Sharia is actually lower. Okay, Sharia is actually lower than the conventional. So that is why the spread gets narrowed, because when they put into the asset of US asset, they gain more in terms of Sharia, and therefore the spread actually tightens.
Yep.
Okay, so that is what I can understand from the composition. But again, we are still unsure because there is not much detail coming out from EPF. This is our deduction and this is our assumption of the case for US asset and also the Malaysian asset.
Yeah, but I still think that for EPF, right, it's a very good place. I would think that one of the best investments in Malaysia with a very low risk but quite decent returns. So a lot of people will be saying that your EPF, I should actually withdraw when I retire, right? Actually, you should leave majority of it inside to generate compounding interest. Yes, that's right. So try not to withdraw it unnecessarily, and also invest on another places that could be giving you maybe equal amount or even lesser than that.
Okay, so Priscilla, I just have one question. Maybe some of the audience also might want to understand. Can you not withdraw after you have retired?
Yes, you can actually. So you can just leave it there, and then you will be able to enjoy the interest up to you reach 99 years old. 99 years old.
Okay, that is very, very.
So you do not have to be worried like, they will not be giving you any interest or after you reach your retirement age. So just leave it there and then enjoy whatever that's inside there lah.
Right. I mean, 6% and also 5.5% every year on top of whatever amount that you have, when you're retired.
Yes.
Maybe say around 1 million. Then you get about 50,000 to 60,000 a year. That is quite a decent amount, right?
But 1 million, I mean, these days, a lot of news are saying that 1 million is enough for us to retire.
Yep.
But actually, not enough at all lah.
So assume you take out maybe 200k, then leave the 800k inside to generate cash flow. I mean that sounds correct, right?
But if you were to have like 60 years old when you have 1 million, right?
Yeah.
That would mean to say you can only spend present value of money is about 1,000 ringgit, lesser than that.
Right.
So I personally,
what is your aim?
My aim, the required fund for me to retire is about 7.6 million.
Wow, awesome.
Because I'm still, still got quite some time to reach my retirement years, and also I want to spend 10,000 a month.
Right, 10,000 a month. That's a.
So if you want to spend 5,000 a month, maybe your goal would be around 3.4. But 5,000 a month, that would mean to say you can't cuti other country already.
Malaysia,
Malaysia, So everyone is different lah.
Yep.
So my number is 7.6 billion. Other your number could be different. But what's most important thing is that I am investing towards my goal, and what I'm investing right now, DCA every month, I'm actually on track to retire. 60 years old lah. Okay, I don't want to retire early. I don't need to retire early.
Yes. Okay.
So yeah.
So I think, Priscilla, we have come to an end for this session, and I think audiences has gained a lot of insights and knowledge about this US dollar, EPF, and also the ringgit Malaysia, SST as well. So I think anything from the side.
So if you want to know your retirement numbers in details, you can head on to our website, mula.com.my. Okay, and then we actually offer our coaching services starting at 1,999 ringgit for the entire year. So you have unlimited access to a financial planner for only that price. Okay, alternatively, okay, we also offer a free 30 minutes call for you to better understand before you even commit into it. Okay. Besides that, we also offer free financial planning through our Mula app. So if you want to do it, yourself for free, head on to our Play Store or even Apple Store to download our Mula app lah.
So if you like this video, just hit the like button and subscribe button in our YouTube channel. And if you want to know more about any questions or any topics that you are interested, leave in the comment section. Thank you. Bye.